Good morning, teacher. We are the group 3, and we are starting present about Amazon. The first part, we have the history of Amazon. Well, Amazon is a multinational distribution company in the American region, standing out in the service industry. Its main market is electronic commerce together with cloud computing services. These are the most relevant events that the company has gone through since its foundation. It was founded by Jeff Bezos, and launched in 1995. The main institutional shareholders are Advisor Group with 7.1% of standing share, Vanguard Group with 6.6% of all outstanding shares, and the last one, BlackRock.
Now, I'm talking about microeconomics environment of Amazon. So first, we have the commercial environment that Amazon changed also the economy with the new sales models. That's for bring this new adapt to the technology to come by this old stuff. Yes, use the internet, the monetary policies, the price variations, yes, in the sales market, the price increases in the retail sector also affect earnings in the minor sectors, but just implement more modern robots in their plants just to improve his sales count. Also, the employee benefits that Amazon brings are the health and the financial insurance, the investment in the same company just for shareholders, the financial and family advice, high level discounts, and also free comprehensive care line. For social development, have the creation of new plans guarantee that creates new jobs. This creation of new plants are in parts of before never other firms look. Now, also inclusion of people with disabilities and technology donation with the Amazon Web Service for the ONGs just in the cloud. Well, the competitive firms that Amazon have is the Alibaba, eBay, JD.com, and Mercado Libre. For the environment impact that Amazon did or do are the sales model. This sales model just changed totally because which separates the prime members and also the express shipments. This model change and emission the last mile for that millions of tons, that is 44.4 for CO2, that is just impact in the environmental. Also, the packagings need to be returnable and just use a neglect of the plastic. So for the sustainable development, we need Amazon just looking for implant new fleets of electric cars in their plans of their for their phrase for the staff.
Okay, so Amazon has 3 strategies. The first one is the commercial, which is expanding the company into new markets and products, the acquisition of competitors in foreign markets, and the constant innovation of the e-commerce platform. For the operative is improving their technologies, mostly in logistics and the research and development department. And for the financial is reinvesting more of their profits into the business, the acquisition of other companies, and investing a great amount of money in the logistics area.
Threats and opportunities. Threats: government regulation may threaten Amazon business in some critical countries. Amazon does not ship to Cuba, Iran, North Korea, Sudan, and Syria. The increase in cybercrime can affect the security system of the company's network, and aggressive competition with big retailers like Walmart and eBay may give Amazon a hard time in the future. Opportunities: Amazon may get the opportunity to expand its operation in developing markets by expanding cyclical stores, Amazon can improve competitiveness, gain large retailers, and attract customers to the brand. And the acquisition of the startups allows Amazon to leverage autonomous driving technology to exploit the increased demand.
Well, about the vertical analysis of balance sheet, the balance of the last 10 years in the part of the cash and cash equivalents account represent a lower percentage compared to the total assets. This means that the company, like Amazon, has little liquidity to carry out its operation. Regarding liabilities, accounts payable are higher than cash and cash equivalents account. This is because Amazon usually shares a percentage of the products they distribute, and their collection times is for period of 20. Well, passing of horizontal analysis of the balance sheet. The horizontal analysis is the percentage of variation experienced by an account to be measured. That is to analyze whether in the period that company's total investment increase or decrease, and by what percentage is it so. On the other hand, in the property, plant, and equipment accounts for 2010, there was a more than significant increase of 3 to 3.5% according to the timeline during to vertical analysis of the income statement. Regarding the income statement of the company Amazon using the vertical analysis method, it can be seen in this slide that the gross margin during higher than the percentage of total operating expense.
Ratios are finance performance. The important ratios like ROE and ROE present a wide fluctuation during the decade period, meaning that the company may have frequently changed its strategies. Other financial ratios, like gross margin and finance leverage, maintained during these 11 years analyzed, showing the stability of the operation. Its net profit margin seemed to increase in recent years, giving a positive performance for the capital market. Regarding the operation efficiency ratios, we can notice that this company has a negative cash conversion cycle, meaning that its supplier finance their operation, as well as its working capital, which remain positive, meaning that the company may have more short-term assets than short-term debts.
Well, for the next one, now I'm talking about working capital management strategy. As you can see, we have these efficiency ratios that the first one are days sales outstandings, day payments outstandings, days inventory outstandings, operating cycle, and cash conversion cycle. As you can see, between these periods, that 2020, between 2010, 2020, the Amazon has a strategy that not having much inventory in the warehouse, that having a high turnover of this, as well as showing a large number of days to be able to pay its invoice or obligation. That is, the firm expects that the collection time for the items sold in the short and when they have it inventorily, it will be there when they make the payments to the suppliers.
Okay, so for the cost of capital of the company, the WACC method was used using the formula shown here. And as a result, it can be seen that there has been a significant increase in the percentage of cost of capital, reaching its highest peak in 2018 with cost of capital of 13.98%. Okay, for the measures, first we have the NOPAT, and here we can see that the last 3 years had the highest profits, though this is because the company paid a very little amount of taxes on these years. Here on the ROIC, we can see that the years with the highest returns were 2010 and 2018 with 32.5% and 28.93%, and the year with the lowest return was 2014 with 0.13%. For the EVA, we can see that the last 3 years were the ones with the highest economic value, and on year 2014 and 2017, the EVA was negative, which means that the cost of capital was higher than the ROIC. Here we can see a relationship between the ROIC and the WACC, which shows that the company actually creates value, except for the years 2014 and 2017. And finally, for the EBITDA, we can see that the trend has always been increasing, and it shows that if it were not for these expenses, then the company would increase its earnings for each year.
For the financial structure, we analyze the financial structure. It's similar to other companies in the market. Amazon has a high percentage of debt compared to the assets. This dangerous signs their leverage, for the most part, is made up to the third-party capital, and they could reach a point where they cannot pay their debts. We also that 20% of debt comes to the long-term debt. Yes, the year-over-year increasing and long-term debt is related to Amazon quest to the offer more products variety. Also, as we can see, Amazon has the high demand, and in general, investors tend to prefer the low ratios, and the interest will be protected. Well, the ratios, DPO, developed delivered payments outstanding, that the debt to the equity ratio, the current ratio, and the ROI. For that, the firms that have the same model of the Amazon, yes, eBay, Mercado Libre, and Alibaba. As you can see, Mercado Libre has more days of DPOs, like Alibaba, that is the first competitions, and also the eBay. For the debt to equity ratio, Alibaba have the less ones, and the current ratio, Alibaba and eBay, yes, stay in average at the same amount of Amazon too. That is the same for the row. For the ratio of outstanding state payables, yes, it's a financial index that tells the average time days that I said that the company takes to the pay to the accounts, including the suppliers of vendors of financial.
Amazon has previously used bonds and show in this slide. E-commerce here and Amazon has taken advantage of market condition by placing 10 billions in bonds with different maturities, including 3, 7, 10, and even 30 and 40 years, some of which receive that. For the future, it's the option of acquiring a bond where the appropriate option to settle the debts that a company may appear a period of 7 years, like a long term, was proposed to carry out
The Amazon company previously used bonds as shown in this slide with an issue volume of $1 million. The coupon is 68.75% and an annual JTM of 19%. Well, in the future, like prospectus bonds, if the option of acquiring a bond is proposed, it will be a good option for the company to cover its steps. A period of 14 years has been proposed to carry out the bond calculations. Therefore, the volume issues will be 750 millions, the coupon of 6.5%, and an annual JTM of 19%.
Amazon is a company of North American origin based on the United States. It's a good option and at the same time convenient that your bonus or bonds are in the local currency, that is in dollar, since it's a commercial currency and is widely used in different countries. The first, capacity. Amazon is financially stable company and has a very stable liquidity for investor. On the other hand, his account payable made a high percentage each year. The second C is character. Amazon currently maintains a short, medium, and long-term life of credit as the cash flow from the loan helps maintaining their financial balance. They are also looking for cheap loans. The third C is collateral. Today, Amazon operates in more than 165 countries around the world, and its service and product has established. The fourth C is capital. The importance of the capital has a company needs to operate a business in earnings. Consider 2020 net income of 21.315 billion dollars, discounted capital expenditures of 3 billions, and 2019 operate cash of. And the last C is conditions. According to Amazon, uncertainty over the past 2 years has led to presidential elections, domestic tumult, and the trade war with China. But now there is uncertainty in markets around the world surrounding the coronavirus pandemic.
Okay, so for the cash flow analysis, first in the operating activities, we can see that there has always been more inflow of cash than outflow of cash, and it has always been increasing except for the year 2021, where it had almost $20,000 million of decrease. For the investing activities, we can see that the outflow of cash has always been higher than the inflow of cash, and the years with the most amount of invested cash were the last 2 years. And the financing activities, we can see that the year 2017 is the one with the highest inflow of cash, and the year 2019 is the one with the highest outflow of cash.
Now, I'm talking about the equity management. As you can see, that this consolidated of the statement of stockholders' equity. Well, the last 5 years, the net income have increased that 3,000% due to the reach and the participation that the firms had with the acquisition of new firms, such as Gitsy, Whole Foods. That income has increased due to the development and these other market segments of other hand decrease in the figure of share-based compensation. It was been increasing as a whole, that is paying employees, executives, and director of the company with equity in the business motivation for employees without affecting the salary that they receive. On the other hand, Amazon has not present any figure for the payment of dividends, but it has covered with the repurchase of the shares. Well, as you can see, this image for the total share per year of Amazon. The growth in the numbers within the statement of change in the equity of the Amazon company, we can identify that the provision of capital in this financial channel are through the sale of shares in the stock market to the general public, as well as through various financial entities, digital technology that provide a good experience for common user. As can be seen, the figure that grow in the number of shares sold the market has been increasing since 2009, when Amazon had the offering 442 million shares, as well when it net comes growth, the number of shares increased, and they had been doing in 2010 and 2011. However, their growth varied irregularity until 2015, when the 477 million shares were put up for sale, around 7.91% more than in 2009. The year of 2015 was the beginning of the gradual growth until 2020, on average of 6.91% more in the number of shares. Well, this share is the earnings per share of Amazon is talking about this figure. This regarding the benefit distributed for each share of the Amazon company grants to the shareholders that include the positive values, as can be seen in the figure. between the periods 2009 and 2020, like was the value, this will continue to decline, reaching a negative value of minus $0.6 per share. It was impact in this firm, but in the shares in 2014, that is minus 1.80% less than the previous period. This was due to the fact that the company ended the exercise with losing, giving investor an index of notable losses. However, Amazon add new attributes to its provision of business model. Also, these shares return to obtain favorable results of $1.3 per share, and the way the future values continue to grow, going from $20.30 in 2018 to $41.8 per share, having generated a benefit of $14.5 more than 2015.
Okay, so for the possible risks, the first one is the highly competitive industry, which makes competitors make strategies to compete with Amazon, and in order to make them reduce their market share. And if the company reduces its market share, the shareholders would lose their money. The profit uncertainty, because the net income of Amazon is always less than 5% of the total revenue, and being so close to having losses, it would make uncertain of the investment decision. The speculative valuation, because well, the good process of the company leads to great amount of investments, and therefore the price rises. But this means that the price has an increased volatility. For the dividend discount model, we use the Gordon-Shapiro formula, projections to the year 2030, and the assumptions that the company would start to pay dividends in the year 2022, because the company doesn't pay any dividends. And we got that the price per share would be $305 with 27 cents. And this would means that the company is highly overvalued, because the market price of the shares is approximately $3,000. So the recommended action would be to sell the shares.
After estimating the growth from 2021 to 2027, these percentage were estimated, and we consider that it should be on descending scale, so that the more years they pass, the less of value in percentage will be.
Methods. To evaluate a company using the two multiple methods, we use an indirect approach using its major competitive ratios. We analyze eBay, Alibaba, and JD. With the first method of EBITDA, we go to compare with other companies. The enterprise value for Amazon is $1 billion. And with the second method of price to earnings, we go that the enterprise value of Amazon compared to other companies is $1,020 million. As a result, we found the industry price to earning ratio contain a lower enterprise value and equity than the ones obtained through EBITDA ratio. In conclusion, this main point that the industry EBITDA ratio is closer to Amazon's than the industry price to earning ratio.
Talk about now the market capitalization method. Well, this method of market cap just need to multiply the current market price per share with the total number of outstanding shares. As you can see in the table, in the year 2020, the price of share was $3,256.93, and the number of shares was the 510 millions of shares. So the market cap method in that case is that amount that you can see in the table.
Okay, so for the analysis of the valuation methods, we can see that the most accurate method is the market capitalization. And besides that method, the most accurate one is the one with the multiples using the EBITDA, because it's the closest to the market capitalization method.
Talking about how Amazon avoid a similar situation of GameStop. Well, investment funds that the company would be broken due to this new stage of COVID-19. This is the GameStop context. The utilization of the way to purchase the operation generates that they will close the branches and not rapid adaptation for the company. Did notice that what happened was that these mutual funds were shorting 2,500 million of dollars of GameStop shares, and just a group of young people who be on the stock market got together in another another way of the investment fund making they buy share in the quantity and also accelerate time just to make these investment funds lose a lot of dollars, like I mentioned before. This well, Amazon could implement better control in the offer of shares, also reduce the sale of shares in the gap periods, establish stock buyback plans for the shares, and also to not using dividends. Not using dividends, just only all of the incomes to reinvest to the company, and shares remain stable with the prices on the stock market.
Fintech. Amazon uses Amazon Web Services as fintech. This is the most adopted and complete cloud platform in the world. Both the startups and large companies in the market choose to use Amazon Web Services in order to reduce costs, increase the agility, and innovate faster. Its main virtue are functionality. It offers more services and features than any other cloud provider, from structured technology to emerging technologies like artificial intelligence and databases. Amazon Web Services has millions of active customers and 10,000 partners around the world. Security. It meets the security requirement of the Military International Bank and other organizations. Innovation. Amazon Web Services is constantly improving on the latest technologies in order to experiment and innovate faster and can be used to transform your business. And global network, it's present in 18 port zones in the world, spread over 26 geographic regions around the world.
For the current context, we can see that the current pandemic and economic crisis has affected Amazon in a positive way, since it has increased its revenue due to more orders online, because people want to avoid getting contagion.
In 2020, Amazon Sustainability Report indicated a commitment to sustainability. In 2019, the alliance between Amazon and the Climate Pledge Foundation was formed with a vision of achieving carbon neutrality by 2040. On the other hand, Amazon is developing a series of actions to achieve this goal. Amazon committed to using 100% renewable energy in this operation by 2025 to achieve the goal of carbon neutrality. On the other hand, Shipment Zero is a project that Amazon proposed with the aim that all shipments are carbon neutral. Also, Amazon placed the largest order for electric vehicles as a signal for the production and commercialization of new technologies. Also important to mention is that Amazon created the largest wind farm in rural Texas, USA, and was also involved in shipping empowerment programs for women suppliers in Cambodia. Potential merger and acquisition process. There is currently the possibility of a merger between Amazon and the British food delivery startup Deliveroo. This is a result of Amazon's requirement a food delivery service. Deliveroo's characteristic of having dark kitchen could bring many benefits to Amazon in terms of logistics, since a static physical restaurant would replaced by container located in affordable public places. Clear that the idea of Amazon is to reach thousands of customers without incurring the enormous expenses that usually occur when having a real restaurant. The clear difference between Amazon Deliveroo and Uber Eats focus on the fact that the operational costs seem more limited. An Amazon Deliveroo merger will allow for a lack of concern about profitability, but it would also be important for Amazon to analyze whether an alliance between the company is feasible before considering an acquisition.
Now, I'm talking about the potential LBO. Regarding the cost of acquisition of Amazon by Whole Food Market. Well, this acquisition of Amazon disturbed $13,700 million with a cost of $42 per share. In addition to the debt that Whole Foods has maintained in past operations. Well, on the other hand, this operation market the beginning of the opening of bonds, being Amazon the first participation in debt market, placing that $16 billion in bonds, of course with not guarantees, in 7 equal parts for almost 14 years. That is a long term. This time of long-term debt operation strategy exposed to the stock market that the solidity to the company has with a projection to the future side the firms is growing rapidly. On these cash flows are highly positive, very apart that thanks to the bond sales operation, it allowed Amazon a credit rating between AA minus stable, but stable, and allowed Amazon a credit rating. Also, Modi Investor Service accredited Amazon between AA minus to Baa1. For other part, the incorporation of Whole Foods also seeks to get involved with a lower middle socioeconomic sector in order to collect more customers, leading to increase the revenues of the company in addition to developing the market segment that it aims to lead. Now,
About the policies of corporate governance, Amazon outlined corporate governance policies focus on carrying on of the environment and carrying customers to future improvements. The first is focus relentlessly on customer. The second, make bold investment decision of a long-term leadership consideration greater than short-term profitability consideration. The third is focus on cash. When we are forced to choosing between optimizing the appearance of the gap accounting and maximize the present value of the future cash flow.
now I'm talking about the financial derivatives. Well, the financial derivatives that Amazon could have are the future option and CFDs. For the future, Amazon could use for this heading of risk management. This is a contract where our two parties are obligated to fulfill an established agreement, such as determining the quantity of goods with a price fixed in advance. For other part, Amazon could use options that are contracted made between two parties allow for owner to the sell part that just to buy or sell the asset at a specific price on or before a specific period and date too. For Amazon, this type of financial derivative will be useful in the event that shares are traded with other type of firms that Amazon planning to trade with, maybe technology. For CFDs are the contracts for difference which allow Amazon to sell a certain amount of units of particular assets, depending on decrease or increase in the value that thanks to the leverage. The gains or lose will depends on the fluctuation of the price of the assets. With these CFDAs, it's coming use. It will use for Amazon um, when the period of the times are so in increases. Amazon can just his assets or the asset that he needed or just increment with use this kind of derivatives too. Well, for finals, I'm talking about the conclusions and recommendation. The conclusions that Amazon would build a multinational with logistics and headquarters in the world. Yes, they use fintech and various Amazon managerial values make it financial solid as seen in the financial plans above. Also, it's a company that thanks to its number of shares listed on the stock market can be able to take advantage of its incomes to develop technology, revolutionize, change, change the market segment, and also acquire new things. The most accurate valuation method besides the market cap is the multiplies by EBITDA because it is closer to the actual market value. The recommendations of our groups are to take into account several factors when acquiring a brand because it will be able to determine whether the brand will be profitable in the long term in order to avoid monetary losses. Also, Amazon continue with the sales and repurchase of shares in order to continue increasing its value within the stock market, maintaining its position as one of the main elite and dominant firms without the term online retail sector as well in the new market segment, which potential well with the acquisition of new firms of this service over. Since the price of the share is highly speculative, it's recommended to invest with caution because the price is highly volatile. This is the reference that that me and my group use. It's all. Thanks.